Tesla stock jumps in the after hours after the earnings and after the earnings call 5.69%. You couldn't make that up. And as you can see, there was quite a big jump right here. Also, keep in mind that the markets today closed just a tiny little bit lower than where we opened today, and Tesla closed a slightly bit higher. And then, of course, Tesla beat the earnings per share estimates, as you can see here, just like it beat every single EPS estimate in 2022 and 2021. Troy was quite right on the EPS number, although Tesla did come in lower with their automotive gross margin. So Troy only missed EPS by 1 cent, which is pretty good. And the consensus was at 110. But for gross margins, the actual was 24.3%. And that, of course, is because of the price cuts, and the costs have not come down that much yet. So remember this price cut in China that was announced in October? Well, Tesla told Reuters it was adjusting prices in line with cost. Capacity utilization at its Shanghai Gigafactory has improved while the supply chain remains stable despite the impact on the economy of China's stringent zero-COVID restrictions, leading to lower costs, it said. Yeah. Anything that comes from Tesla China, just ignore that, basically. Think for yourself. Don't take Tesla China word for anything really very meaningful. So if you look at automotive gross margin for Q4, 25.9% here versus 27.9% last quarter, remember that Giga Austin and Giga Berlin are both ramping, so their efficiencies are improving. So if we didn't have any price cuts, we would have or should have seen noticeable improvements right here in the gross margin. And at the same time, a lot of the commodity prices are coming down, so that should put more pressure for the gross margins to go up. And today on the earnings call, we also had confirmation that basically no cars were sold at these super high prices in the US. They were delivering cars from a backlog still in November, at the mid-ish end of November. So these price cuts that we saw in December, especially the ones that were under $4,000 that lasted for a bit of time at first, you wouldn't expect to see really any noticeable gross margin hit from those. So this, I would say, is China. This is China selling at lower prices. And of course, in Q1, we are selling at lower prices still. And of course, expect to have someone like Gordon Johnson saying, oh, this is the end of Tesla. The gross margins are collapsing. The company is going to be collapsing. And the operating margin is also going to be collapsing, because when you discount a vehicle, all of it, you're losing a lot of the profit, perhaps even all of the profit. But then look at this operating margin. Higher, okay? It's higher than the previous quarter, than Q3. We had lower automotive gross margins this quarter, and yet the operating margin has gone up. So the obvious conclusion from this chart right here is we need to take a moment of silence for the shorts. I want to say I'm sorry, but I'm really not. Tesla occasionally will have a bad quarter or two, but long term, the income is going to keep increasing, and especially operating margins. And did you see this guy on TV recently? He's a Nobel Prize winning economist. He's saying Tesla cannot be like the next Microsoft or one of these big tech companies. And yeah, I guess he's right, because when I look at this chart, clearly it is nothing like Microsoft. I mean, look at how bad Microsoft is when we look at this right here, revenue after crossing $10 billion in fiscal year. So after 5 years, 5 years after crossing $10 billion, Microsoft was only at barely close to $30 billion. Tesla is already at 81 and a half. And sure, Tesla is not the next Apple because it has already surpassed Apple, at least in this metric. And clearly, the growth story for Tesla is completely over. It's not going to grow. I mean, when we look at Q4, at the revenue of Q4, and we compare it to 2019, it doesn't matter that the revenue is basically almost the same in just the last quarter when we compare it to the whole year of 2019. So, yeah. Now, of course, I believe Tesla has the brightest future ahead of it. I mean, the future certainly has never looked as bright for Tesla, in my personal deep conviction, especially when we look at Tesla stock, because things are getting better, and yet the stock is down still a lot, although it has recovered noticeably, significantly now. But check this out. Now, Tesla is actually benefiting from net interest. When we look at the little debt that Tesla still has and however much interest Tesla needs to pay, and then we compare that to how much cash Tesla holds and the interest it makes from that cash, the interest it makes is higher than the interest it has to pay in debt. There's no other automaker, especially EV automaker, that is as well positioned for the recession that Elon Musk is expecting. There's no other company that's better positioned than Tesla. But one of my favorite charts of all of them is this one here. This is average selling price of each vehicle. Now, when we take inflation into consideration, actually, the average price of each vehicle, it still has come down because the inflation was quite a bit higher than however much the average selling price has increased here. So this is actually decreasing in realistic way. And the operating margin, percentage-wise, is increasing. It is extremely difficult to increase your margins while you are decreasing the average selling price of your product. It's possible, but it's extremely difficult to do. And because of the price cuts for 2023, I do expect this to come down significantly. And the number that Tesla management is optimizing for, they specifically stated today on the earnings call that they are optimizing for the operating margin specifically. They are not optimizing for gross auto margin. They are optimizing for the operating margin, which makes sense. I am fully for that. Also, check this out. Supercharger connectors. We now have 42,000 of them. You know, this has definitely been an actual goal. The capacity guidance for each factory has not changed and is remaining the same compared to the last earnings report. But we know Tesla is being quite conservative here. And I do like this more conservative approach where we later will get surprised on the upside. And the most important chart to me personally is this one. My favorite chart is the delivery one, but the most important one is the cumulative miles driven with FSD beta. Once this starts to increase exponentially very fast, you know we are approaching full self-driving. what I can see from this chart right here is that people are not really using full self-driving. Keep in mind, this is cumulative. So I would want to see a more steeper increase next quarter. If that does not happen, it just means most people are not really liking full self-driving beta, because if you do like it and if it's good enough for you in your area to use it, then you would be using it every single day, which most people, I don't think they are using that yet. So we did get a lot more users because of FSD beta wide release. And while we do see an increase here, it is not a crazy high increase yet. I personally believe everyone is going to be so surprised when FSD actually comes out. It'll be the same thing like with ChatGPT. Everyone is telling me who I show it to, we're like, this came out of nowhere. But if you followed OpenAI, it's not really that big of a surprise. Energy storage is growing relatively fast. Energy storage deployments increased by 152% year over year in Q4. Gross margins for energy are still relatively low, but it is clearly growing faster than the auto business. So the future looks bright for the business. I would expect nice and continued growth for the energy business overall. And it is also nice to see that the services are also making some money. At least we are not losing money. There's a lot more to cover from the earnings report as well as the earnings call. I personally believe that there is one pretty clear catalyst from all of this that, if it comes true, which is likely, Tesla stock will probably go up like 10% in one single day. When or if it happens, more on that in the next video. And for now, these are 48 reasons why I only own Tesla stock in my stock portfolio. My name is Matt Postis. Like and subscribe if you haven't yet, and I will see you in the next video. Thank you so much for watching.